Thank you. So the other technology company that announced its results today was Genpact. Its first quarter results surpassed all street expectations, going above 15% to $330 million. We saw a sharp rise because of the global client revenue. Also, the $550 million Headstrong acquisition is already paying dividends. The acquisition has helped the company raise its full year guidance to 23 to 25%. Pramod Bhasin, the president and CEO of Genpact, now joins us to break down those numbers. Thanks, Mr. Bhasin, for joining us here at CNBC TV 18. So your $550 million Headstrong acquisition already paying dividends. You have upped your guidance for this calendar year now.
Yes, we have. I think, Headstrong, medium to long term, Headstrong should grow at about 20%. We obviously being conservative in the first year. This is early days. We've just closed the transaction on Tuesday, but it gives us access to a terrific vertical where we didn't have adequate presence in the capital markets area, so we're delighted with it.
Hi, Pramod, Shireen here. I just want to come in on that guidance that you put out, and I've been looking at a whole host of reports that have come in post your numbers, and I'm picking up JP Morgan, and what JP Morgan seems to suggest is that the Headstrong annual revenue guidance on the basis of the guidance that went out would have worked out to about $260 million in calendar year 11 based on the disclosed calendar year 10 revenue and the 20% growth expectation. The reason that you've guided to about $225 to $240 million, it seems to be on the lighter side of what was anticipated or expected.
We're being conservative, Shireen, quite honestly. I think it's a new acquisition. We've got 8 months of the year left to go. We would be very disappointed if they grew at small numbers. We think they can easily grow, well, not easily, but they should grow at 20% medium to long term. We're just being conservative. It's early. It's early days. I think there's always a danger in acquisitions that you should integrate them well, do the cross-selling well. Some of those things will really kick into effect next year. So we're being nice and conservative.
So you think there is room for revising upwards your guidance on the back of the indications that you begin to get in from Headstrong?
Not right now, Shireen. I think it's very early. We just closed the deal on Tuesday, And also for us, for the full year, we've had a terrific quarter. We're very happy with the results. I think it's still very early in the year. It's beginning of May. I think as we go through June, July, August, then we start seeing, okay, what the rest of the year is going to look like. There's still enough choppiness. Japan obviously had its issues, given the huge tragic effects it had there. America seems to be recovering. Europe, our pipeline is terrific, but the overall economic environment isn't. And so I think you've got enough mixed bags there that we're going to hold our horses for a while.
All right, I want to talk to you about, your GE business, Pramod, because the GE business has grown just about 1% year-on-year, which has disappointed most analysts, and it's seen a decline of about 10% quarter-on-quarter. So your global client revenues have come in very, very strong. Give us a sense, really, of what you expect on the GE side of business and also on the global client revenues going forward.
Sure. Sure, the GE side is coming in exactly as planned. What happens with GE typically every year, and this is an issue we've gone through for the last 5 years, is in the fourth quarter, we get a lot of projects which shut down and close down and which we get paid off on. And then they take a little while longer to wrap up in the first quarter. It's just a year-end pressures. We do a lot of finance and accounting work. That tends to peak in the fourth quarter and do a slower start in the first quarter. There's a lot of work we do on customer service and collection. Again, that tends to peak more in the fourth quarter with the Christmas shopping, goes down in the first quarter. So that's what you're seeing there. But GE growth will be low single digits. That's where we expect it. It will be fine. It always has a seasonal decline from fourth quarter to first quarter. Global client growth, and within that what we call smart decision services, our analytics powerhouse, our re-engineering work, those have been fantastic. We're delighted. Global clients business process management is at 28%. Global clients overall is at 24%. This is pretty much all organic. So these are very, very good growth rates compared to anyone out there. And I think that is the momentum we'd like to maintain. Adjusting it one quarter, we don't want to pronounce victory so fast. And I don't think we should.
Let me then talk to you about what's happening on the BPO side of the business and the IT services. BPO revenues, of course, are very, very strong for you, up 17% year-on-year. IT services revenues, though, flat year-on-year, and there's a sequential decline. analysts concerned about what's really going on the IT side of the business. If you can give us some indication of how you expect the IT services side to pan out.
Sure, Shirin. We promised to fix our IT business. You know, we've got some weaknesses in Europe, and that's really what's dragging it down. We've got a business in Europe which isn't recovering. It's an onshore business which isn't recovering as fast as it should. We're beginning to fix it. Our win rates are up. Overall IT business is up, not as much as we would like, but trending very nicely. We won some recent deals. In fact, a couple of days ago, we won a big deal which we are delighted about. So all of the trends are right. It has yet to translate into revenue, so I think the concern is valid. Because, you know, the IT business should be growing at 20-25%, which is what everybody else is doing. I think we'll do that. GE IT growth is strong and good versus where they were in the past. It'll give us a couple of quarters. It's a business we need to fix and get it back on the rails. It's firmly on its way to do that. I feel much better about it than I did 2 quarters ago. I think we've got some weakness in the European side, but frankly, that's small enough that it shouldn't impact the whole very much.
The margin guidance
on the BPO side, I think you...
Sorry, go ahead.
Please, sorry, go ahead. On the
I was
BPO
just asking
side,
you on the margin picture, Pramod. You've guided for between 16 to 16.5%, so feeling as confident about the margin picture. And also previously when we last spoke, you had spoken about the wage inflation of about 7 to 8% in 2011. Does that stand still?
Yes, it does. Yes, it does. We can, I think, probably our margins are coming in nicely. We're very happy with the margin performance this quarter. Our margins are going to come in, I think, fairly well, Shirin, for the year. We're going to plow it back. We're going to expand our sales and business development people up by 20%. We're making a concentrated effort to do what we call shift the center of gravity of our company closer to where our clients are. So shift it to the US, shift it to Europe, shift it to Japan. Have our senior leadership sitting out there next to our customers. So all of those things we will do. We will make those investments. We've doubled our training budgets. I think we need to do that because in the back of robust demand, we just have to make sure our skills are very sharp. And that's really what we're aiming for at this point in time. So 16 to 16.5, yes, very much so. Very comfortable. Right.
All right. My final question then, Pramod, you know, your total headcount comes in at about 45,500, which is 10% higher year on year and about 4% quarter on quarter. If you can give me some sense of what you can expect in terms of hiring. And also your employee attrition is down to about 29%. Do you anticipate that going lower?
Yes, employee attrition still too high, Shirin. We've been the benchmark for us. You know, we count employee attrition from day one. So we don't differentiate between 0 to 3 months and do any of those juggling with numbers. If you get paid, you get counted. So employee attrition, frankly, for me at 29% is too high. It should be between the 20 to 25% levels. We will drive it there. It peaked last quarter. I think we won't let that happen. It affects clients. It affects quality of service, all of those things. So we will bring it back. Wage inflation is where it will be, as we said, you know, 7 to 8%. We're very comfortable with it. And then, as we look forward for the year, the rest of the growth of the, you know, adjusted operating margin story will fall through. The Smart Decision Services, which is part of our analytics business, is higher margin business. As long as we see that pulling through nicely as it is today, we will be in a position where we will be very comfortable with our margins. We should be.
All right, Pramod Bhasin, congratulations on delivering a strong quarter, and we wish you the very best of luck going forward.
Thank you, Shirin. Thank you.
A happy band there, Pramod Bhasin of Genpact. Strong numbers coming in. Also